Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market. Fresh start to the week, but a pretty important week with tomorrow being CPI and Wednesday being PPI. So I think those, at least one of those catalysts, if not tomorrow's catalyst, should be essentially what moves Tesla finally out of this consolidation range, right? We've been consolidating in this range for quite a while now and really just not finding a way to move out of it, right? We're just ping-ponging back and forth for such a long time, and it seems like we need a catalyst to move us out of here. And it seems like tomorrow, CPI, fingers crossed, at least in a way, might be the catalyst that finally decides where the hell we go from here. So with all that being said, if you enjoyed, don't forget to hit that like button. If you sure, don't forget to hit the like button. This is not financial advice. I'm not a financial advisor. And of course, my membership section on YouTube is live. The link is down below if you're interested. $3 a month, where I share my intraday thoughts on Tesla and updates and whatnot as the stock or as the day is moving and whatnot, right? A massive post today like this for, all the people there. So yeah, check it out. Link is below if you're interested. Let's dive into it. So Tesla on the day closing down about 1.5%, we'll just say roughly percent, which is going to be putting us at about $239.50 per share, which compared to the market, QQQ actually up almost 1%, even though Tesla's down, Google's down, NVIDIA's down, AMD's up a nice amount, but Meta, Amazon, they're all Microsoft. Pretty much everything is down. Where's Apple? How did Apple actually perform today? Where is Apple right here? Even Apple's down. I have no idea how QQQ is up almost 1%, but regardless, it is. So technically an underperformance, but I feel like this is excusable. Now, again, with tomorrow with CPI, is going to probably give us, hopefully at least, the push that we need to pick a direction. Now, it's pretty simple, in my opinion, the way I look at this, right? This is what I pretty much wrote up for my members, but the way I look at it is as follows. For upside, the bulls, in my opinion, right, they have the upper hand. Right, we're in a bit of a, we have two bull flags. You have the small bull flag here. We have the larger bull flag here, right? The massive one, right? If we zoom out entirely. Right, we have the massive bull flag essentially, or just really descending channel that usually eventually breaks out to the upside. So that's number one, right? It looks a little bit better on the weekly chart. You can see massive run up into a massive bull flag and now potentially massive breakout potentially as well, right? With the weekly still looking, not too bad, right? The weekly still looks kind of okay here. So that's important to understand. We're in essentially two bull flags, small and a big one. Now, that's going to be important there. A break above this now is about, it's coinciding roughly around the same level. If you look at over here, right, the green line with the spread line here from the larger bull flag, coinciding in a pretty similar position of around, 246 and a half, 247, we'll say to make it safe. So that's going to be the level to look out for. So 247 to potentially as high as 250, just because 250 is still that resistance level that we do obviously want to break above. But that's kind of the main range I'll be looking at, with 247 being essentially the breakout. But again, it's important to understand a breakout is a breakout. Sure, it's great, but it's more important to see, do you close out, right? Okay, cool, we can go above 247, but do we end the day above 247? And then even more importantly is, do we hold above that breakout level, like 247-ish, the next day or even the day after? Like that's kind of I have like a 3-day rule. Usually when you have a breakout, I like to wait 2, sometimes 3 days to see if it's a fake out or not, right? Because a lot of the times it can be a fake out. So just take that into account. Just because we potentially go to let's say as an example, we go to 248 tomorrow, doesn't mean, by noon, let's say, it doesn't mean that, time to celebrate. It's the bulls are breaking out. It's obviously looking good, but you still want to be a little bit, tread a little careful, at least in my opinion. So that's why it's important to see the breakout into a close, into a hold. That's the three factors that I like to see before getting, more confident about that kind of situation. Nonetheless, that's the level that the bulls really want to break above, right? About 247, we'll say, to make it simple. And that's going to be pretty important. So the bulls are also above most of the important moving averages, right? We're above the 21 EMA. We're above the 50-day moving average. We're above the 200-day moving average, which is, of course, well below us over here. If we go over to the weekly, we're above all four of those, right? We have the 200 down here, we have the 50 here, and then we have the 100 and the 21 EMA right here, the two yellow and kind of gold lines. So we're above everything on the weekly as well. It's hard to look at this and tell me and say Tesla's looking bearish. Obviously, there's still a very real possibility. We'll talk about the bearish side, right after this bullish side is done. But, just strictly off technical analysis, we're above all these moving averages. And that's obviously a better thing than it is a worse thing, at least for the bulls. So take that into account as well, right? We also have a potential ascending triangle, right? Like I talked about, right? This top of this green, of this bull flag, the green line over here, right? Technically, it's the same level. We're constantly getting rejected at, but we're constantly setting higher lows. So it's a little bit of a weird one because technically the higher lows haven't really started, and we haven't really started this ascending triangle until this push up. So these higher lows technically don't even count for this. But you can still make an argument that we are setting up a ascending triangle if you do like this. right? You can easily just do it like this right here. And it's kind of the same thing, right? It's pretty much the same concept. If I kind of extend it longer, this green line right here is essentially the ascending triangle. So if you do it from here, you can see, well, now we're pretty much in an ascending triangle. We have the green line here constantly setting higher lows. We never set a lower low, which is great. And we're constantly getting rejected at the exact same level that we can't really close above. Yes, we went higher, but we still couldn't close above, which is why I always say it's important to also close above. Right, so essentially we are potentially making an ascending triangle, which is of course also a bullish pattern. So take that into consideration. In fact, I'm actually going to keep that green line there. I'm going to go ahead and redraw that back in because you know what? It's actually kind of important. So we'll keep it like that for now as well. I don't like when there's this many lines, but sometimes it is what it is. I'm actually going to move the 50-day moving average for now. So those are the main things I'll be looking at for the bullish side. Let me make sure I didn't forget anything. Right. And of course, let's not forget the Tesla is still setting up this massive inverted head and shoulders pattern on the weekly, which if it does break, substantially bullish, but this will take a little bit more work to break through and really execute this pattern because, well, you can argue the neckline is somewhere around, it's maybe somewhere around here, right? You can argue the neckline is, I don't know what that was, but okay. I don't know. You can argue that the neckline is somewhere around here, right? Because we never really broke above this level, so close to like 300. Or you can also make the argument the fact that the neckline is somewhere closer to around like this, because we never really broke above this. So the neckline is kind of a descending neckline, which also coincides roughly with this overall red line here from all-time highs, which is going to be sitting somewhere around, close to 270, we'll say roughly, right? Give or take, like 260s to 270-ish, somewhere around that range, which again, it's a possibility that we come up there if we break out, retest that, and then from there, we'll really see what happens and if this is a false breakout or if Tesla can really get a nice run into 2024, because if it does break out, and especially if it goes above this red line, 2024 is looking pretty damn good for Tesla. So take that for what it's worth as well. But ultimately, those are the main things the bulls are looking for, right? Those are the levels that you want to break in order to unlock the next level to go to, essentially. So take that into consideration. Now, let's talk about the bearish aspect. I don't know why there's two green lines here. Let's go ahead and remove this one. Now, the bears, what do they want to do? So they have some work to do, in my opinion, right? The bears, I think it's looking more bullish than bearish, but you don't want to just ignore the bearish side entirely. That's just obviously really stupid. Now, what do the bears have to do to really get their thesis rolling, get the ball rolling on their side, right? First and foremost, they want to break below the rising channel, and they want to destroy this rising triangle. So the rising channel is, of course, these two blue lines right here, right? Let me remove the moving averages for now. I'll remove them for now so it's a bit cleaner, right? So the rising channel are the two blue lines. The bears want to break down below that. And of course, they also want to nullify this rising triangle as well. Thankfully for the bears, and just make things simple, I guess, they pretty much coincide. You can see right around here, which is going to be somewhere around 237-ish, let's just say, give or take. Obviously, give or take $1 or $2, but about 237, right? That's the level that the bulls want to defend and the bears want to break. If they break below that, well, it's going to nullify this ascending triangle, right? It's going to nullify this ascending channel, right? And we break down below those, and that's not a good sign. But that's not enough, in my opinion. It's a damn good start, but there's a bit more work to be done. And that, of course, is going to be the next step for the bears, which is breaking out of this smaller bear flag. And of course, also losing 230, which also roughly coincide. That's going to be really, really important to do as well. Because again, don't forget, so breaking, go ahead and print these back really quickly. Breaking below this channel that I just talked about, where the green line and the blue line, right? That's also where the 21 EMA is and the 50-day moving average are. That's where they both are. So, it should be a lot of support there for Tesla. But if that happens to break, that's not great. But again, if we break below 230, that's where things get a little bit shakier because we're starting to approach the 200-day moving average at around probably 226 by the time it actually happens. That's going to be really important because that's going to be where the gap fill is, right? The gap fill will be somewhere around this 226-ish level, give or take, actually a little bit lower, about 224, and a 200-day moving average will be pretty much just a couple dollars above that. So that's going to be a potential area for a bounce. Could be a potential bear trap as well, where Tesla could potentially, again, assuming this situation plays out, can potentially bounce down to somewhere around this level like this, somewhere around here, give or take, and then overall get a massive bounce, right? And this still could potentially be a huge bear trap. But if we start closing candles below, and especially start holding a couple days in a row below like 230-ish, and especially below the 200-day moving average of around 226, that's where the bearish thesis really comes into play. And that's where I think we'll start seeing the lower 200s. And that's where the bears really, really want to do. So the most important level for the bears is pretty much between 230-ish to 226-ish, right? That kind of range is going to be very important for the bears to break, close, and hold. For the bulls, the opposite, right? Obviously, they want to break above about 247 to 250. Again, break, close, hold. Important. Those are the most important levels, right? And that's the most important thing. The MACD is softening up. Seems like it's unsure where it wants to go, though it's still technically bullish. The RSI is pretty neutral, not really telling me a whole lot of information. But again, just strictly looking at this, just strictly looking at the weekly, it looks more bullish than bearish, in my opinion, as of right now. Obviously, things can change with something like CPI. And the final thing the bears have that also gets triggered on a break of the very low 230s is this head and shoulders pattern, the bearish one, of course. And of course, that's going to help propel Tesla down even further to, again, probably the low 200s. But keep in mind, on the weekly, even if the bearish thesis plays out, and let's say we do come down to the low 200s once again, let's say 213 even, all the way down here, we enter a massive area of demand once again, and the overall head and shoulders pattern still stays prevalent and not broken until we break, close, and hold below, in my opinion, about $200 per share. That's when things get really bearish, in my opinion, potentially. So that's where I look at it right now. If that were to happen, we'll talk about it, but essentially we'll probably be seeing around the mid 100s, honestly, right, which is the bottom of this bull flag potentially as well. So that's the way I'm looking at it. That's what I'm seeing. So tomorrow's a big day. Hopefully tomorrow is the day we finally break out of this congestion and we can make a play happen and something can actually start, happening with the stock for once, because it's getting kind of boring here. But with all that being said and done, that's what I see, and that's what I'm thinking is going to happen next. So if you enjoyed, don't forget to hit that like button. Thank you so much for watching, and as usual, I'll see you tomorrow. Peace.